Hi guys, and today we're gonna talk about lesson A, which is relative strength index RSI. This is the last lesson of the second part, and then the third part we're gonna discuss strategies, how to use indicators interconnectively, and how to place orders like active trading actually. So the first part we go over everything. Second, we get more technical, and then we're gonna apply in the third part. So RSI is for me the best indicator, but just like any popular indicator, the fact that most people has access to it, lots of people are using it very wrong, and I've heard that people hate that indicator. After this lesson, there is very low probability that you're gonna hit RSI. For me, this is the best indicator out there, and if I had to trade using just one indicator, RSI will be the indicator that I like. Now, just before we start, quick disclaimer. This channel do not intend to replace any trading and coaching programs. It is a deep introduction to the world of crypto trading, stock trading, technical analysis. The series of this channel must not be considered as financial advices. Our content are only here to educate, inform, and entertain. Trading can be very risky. Only risk money you can afford to lose. All right. Okay. So, since RSI is so important, let me tell you this. If you need to understand this lesson, you need to make sure that you did go over the lesson about time frame, part 1, momentum study, trend line, and moving averages. Trend line is still part 1, momentum study part 1, moving averages part 2. So you guys need to make sure that you did go over these lessons, and then you make sure you understand the core elements in this before we even get into RSI. Okay, so now let's talk about it. RSI is a momentum indicator, oscillator. It allows you to analyze the supply and ratio. Now this is extremely important, and most people don't get that. Supply demand ratio. RSI do not involve the price in his algorithm. So, which mean, sorry. So RSI, many indicators out there, they present themselves in your screen using numbers that are directly from the price. For an example, moving average and many indicators. But when it comes to RSI, the most important thing about that stuff is it's a relationship between how many of the asset you are doing your analysis on, how many are available for a part of the supply at that particular moment you're watching the screen, or how high is the demand or how low is the demand, and the ratio will give you a number. Now, the standard RSI length we use is the 15 candle close input, okay, and upper band is 70, the lower band is 30. Let's go over this. Okay, so this is the input. Okay, so the indicator gonna go ahead and do 14 last candle and gonna make a deep analysis of the relationship between the supply and the demand and give you a relationship between those two, and the algorithm will give you a number that is from 0 to 100. Now, usually we have open band, okay, and a lower band. So these are the input right there. Let me check. Okay, so the upper band here is usually at 70, and this one is usually at 30. We can change them based on trading strategy later on part 3, when we're gonna study a very famous trading strategy that they call reverse trade that I use a lot on stock market, and I'm gonna show you how you can manipulate these numbers so they can give you entries. Okay, For an example, not just 70 overbought and 30 oversold, and then you go ahead and jump in the market. That's not how it works, guys. Okay, so there is a reason why shorting services allow you to make change on those numbers, is because you can accommodate them to your trading strategy. So the RSI value, like I said, varies from 0 to 100. The mid is 50. Okay, now it is recommended to place your overbought and your oversold line symmetrically. So the normal standard is 70 and 30, so it's 20 over 50. So 20 over 50 will give you the upper band, okay, and the 30 under 50, so we give you the lower band. Now later on, like I said, we're gonna go ahead and modify those things, just like I said, to talk about reverse trading strategy. And there's many other way. Do you place alert in them based on what is the overall trend? You know, there's way to do that. Now the standard style for the class is supposed to look like this. So you have your RSI. I use the white because for me, I think it's easier to place line and make in what they call analysis indicator inside indicator. Yeah, that's the name. So you have your upper band, which is 70, the lower band, which is 30. I usually comes like that, but you can set this anyhow you want, but I like to place this thing in white so I can make sure that I see those bounce, those different change of direction, because the indicator is momentum, so change of direction happens suddenly. That's the reason why I don't want to miss any peaks and these kind of things. They are very important for me. So make sure you use a very bright color. If you're using yellow, make sure it's a very bright color on the line so you don't miss anything. Now, first situation, overbought. Now, this is probably one thing that you will hear from every single trader, but information that I'm gonna give you here, some of you will be mind blown since that this is the first time you're gonna hear them. Now, overbought, generally when your RSI is 70, over 70, it's 70 and more, equal or more, it is considered overbought. Like we discussed in our previous lecture about momentum, in the lesson when we talk about indicators, an overbought is not an indication to enter a short position. People short on overbought. That's a big mistake. You don't do that. It is therefore not stupid to take profit on a long position so you can reduce. Okay, it's okay to reduce. For an example, the last big trade we took on Ethereum on the server virtual beacon, we did use this strategy to cut to take profit from a big position. We reduced it by 50% and then we let it ride all the way up. That was a good way to do it. They are more common in uptrend and we're in downtrend. Now this is interesting, and this is what I'm gonna show you now. It doesn't matter what is the time frame here. If the time frame, the overall trend in this situation, for an example, the overall trend is bullish. Okay, this is bullish. What you're gonna realize, and this is one of the things that that comes with experience, I can say, when you realize that your RSI is giving you more overbought and less oversold, you don't need to force the market. I mean, you see this, the market is clearly telling you that this is a bullish trend, because like you can see, we have like one oversold. This is 70 and 30. This is barely oversold, and as you can see, like we have 1, 2, 3, 4, 5, 6, 7. You know, that's like 10 times overbought. Now, if you short that stuff, you're gonna find yourself in a very bad situation, because in the bull market you have way too much oversold. They are not entry to short the market. Don't do that. You're gonna get bleed. Don't do that, because what happened is that this is what you need to understand. The supply and the demand, they are very dynamic. When you have a big surge of the demand, this thing go up like a lot. It push the numbers on RSI towards 70. The thing is that the supply is not static. It doesn't stay the same way. So while the demand is going up, the value in the supply can actually influence the RSI. For an example, if the supply is not going up, just slowly going up, the relationship will keep going up, and then RSI numbers will tend to go towards 70. So this is very time sensitive, and that's the reason why an RSI is momentum. So we say, for an example, let's say that for a period of 1 hour, you have a big surge of demand. All of a sudden, the supply, the numbers will go toward 70. But the same thing can happen in the next hour. You can have a big surge of supply, and suddenly the relationship push the price all the way down to 30. See what I mean? It doesn't have to be reflected in the price, because what happened is that the price might take time to react to that kind of relationship between supply and demand, and that is one of the most reason why RSI is so powerful. Now, the other thing you need to understand is that there's another way to push the market all the way up to an overbought situation. For an example, if we had this relationship, for an example, you have a kind of balance between demand and supply, and all of a sudden people start they stop selling. That situation will also push RSI towards 70. And that's the reason why you need to understand these are not situations you use to short the market, because anything that create a bigger numbers on the demand versus supply will push the RSI toward 70. See what I mean? People stop selling, this is gonna get toward overbought. See what I mean? Same thing, people start buying even if there's a lot of supply, we're gonna go down toward 30. See, you might need to go over and listen to that again and kind of make it clear in your mind. So an overbought situation when RSI value is under 30, so less than 30, it is called oversold. It is a situation when the price is under evaluated when consider the supply and demand ratio. The supply is extremely high, so we have supply unbelievably high, let's say 4 times higher, and the demand at the specific moment. This is the key thing here. At the specific moment, the lapse of time we are working on, the demand is not high enough. So this is not a buying indication. How do you react to an oversold really depend on your primary trend. So like I said, in a bearish situation, you see this, you might need to reduce a short. But in a bull trend, you need to go in a lower time frame. For an example, if you see that under 30, you see that in a bull trend. If you see that on a bull trend, you see that on a daily time frame. For an example, you might need to go down on the 4 hour and the 1 hour and look for signs of reversal to enter a long position. That is if this is a bull trend. Okay, so I need to go back and kind of explain that too here. So in a bullish situation, these oversold are buying opportunities, in a sense that if this time frame, for an example, is 1 day, you go in a lower time frame and look for situation to enter a long position. This is clearly an uptrend. But if we didn't have this short and that was a downtrend, you will have more oversold situation. You can feel the trend through RSI just by look at it and how it reacts, the amount of oversold versus overbought you have in a lapse of time. So this here, okay, so this is the situation in which you have a clear downtrend here, and then as you can see, you have like 1, 2, 3, 4, 5, 6, 7, and 8 really situation in which you have an oversold. And here, this is like 1. We've been over it for like 1, 2, like we put this 1, 4, 5, and 6. So that's like you clearly have in a lapse of time, that's a daily Bitcoin, there's way more oversold than overbought. Now let's go over this chart a little bit. Let's see, you see this right there, this zone right there, it's oversold, and then you buy. Because the market is bearish, this is the danger. You're gonna have another situation, and then we go down. And this is what you need to understand about RSI. This is not price sensitive. So during that moment, so every single one of these candle I like 24 hours, during that moment you had a big surge of supply. So the supply is unbelievably high. See, supply is very high. But what happened is that if we keep having time is passing by, and then there is a situation in which the demand and the supply, they kind of get into a certain balance, what you get is that RSI move a little bit higher and the relationship stay around 50, between 40 and 60. So that means that the more time we spend, those relationship between the supply and demand can change, and then not the demand might not get big enough to push RSI towards 70. That's an example, and eventually push the price higher. So you have a period in which the supply and the demand, they get into a certain moment of balance, and then what you get is another big seller. Suddenly the supply go all the way up again, and what do you get? Another oversold. So the prices just stay stable. Okay, supply and demand, they kind of find a balance, a moment of balance, and then boom, they dump another sell off, and then this is a bear market. You get another surge of supply. Another situation, let's say that you buy again here. This is another danger. After you bought, let's say that people that are calling, let's buy the dip, that kind of stuff, and then you go ahead, we all go ahead and buy the dip, and all of a sudden there's a huge surge of demand. What do you see here is that the relationship of demand supply change, and then it push RSI towards 70. But what do you see here in the price? It's not really happening. The relationship, the reason is that while demand was going up, supply was following too. At a certain moment, demand, people stop buying, and then boom, we keep going up on supply, and then you get another oversold. And what do you get here is that the price didn't really go up, and then we keep going down. And that can be very frustrating, especially when you're a beginner. You'll be like, man, I'm buying that oversold and the price keep going down. That should tell you a little bit, maybe I'm against the trend. This is probably what's happening. Because if you were clear about the fact that this is a bearish market, overall bearish, then you will have placed more importance on the overbought to short them. So let's say that you saw this thing, you enter a short here, you short here, so you sell here, clearly in the money. Same situation here, you short here, clearly in the money. See that? Same thing. So in a bearish situation, we're gonna have more oversold. We don't really care about them because it's a bearish trend. That's what RSI does. In a bearish trend, we tend to stay more oversold. So the overbought are more important to me. So in a bull trend, oversold are more important to me. So if I have a particular asset that I want to accumulate during the bull trend, I pay more attention to the oversold situation because that is a situation you can buy. So many people, when they trade, there's a very few traders that actually start trading in a bear market. Usually a bull market is more attractive, people get into it, and then they are more used to how many indicators behave in a bull market. And suddenly when everything turned red, since there is a very few traders with bear market experience, then they think you start being frustrated. They don't understand the signal, because what happened is that almost every single indicator in the market behave totally differently in a bear market or in a sideways. So that's the reason why experience is extremely important in the two different major trend of the market. So now, a natural situation is where the market is being traded between 60 and 40. I think I've told you that. If you see this, there is no real bull or trend situation, which is equidistant, like 10 over 50 and 10 under 50. Now, the RSI value tend to stay in this zone in a sideways market. Okay, usually your behavior depend on the primary trend and your trading style. So you can have a neutral in a bullish market. There is a way to behave, and then you can have a neutral in a bearish market, and there's another way to behave too. See that? All these, we're gonna use them in correlation with many different indicators in the part 3, so that you can increase the odds of winning your trades. Okay, so that is an example. So everything's happening here. We kind of stay between 40 60, 40 60, 40 60. And what you see here, a 4-hour time frame in situation of bear market that literally stays for like a month, probably longer than that. So like a normal candlestick chart, RSI can be used with many technical analysis tools for interpretation. So you can place trend lines, channel, this kind of stuff, pattern like triangle, head and shoulders, you can place them on RSI. Support and resistance, you can place them on RSI. This is extremely important, especially when timing market cycle and that kind of stuff over a long period of time. This thing is extremely powerful. You don't have an idea how powerful that stuff is. So often, because what happened is that the market has memory of price, but most people don't realize that the market also have memory of relationship between supply and demand. The market remember that kind of stuff, and RSI is one of the rare indicators that kind of give you a clear expression of this relationship between supply and demand, and less around about the price. This is what attract everybody, but this is what makes the market move. So often they can be made more accurate on the RSI than the candlestick short. So like I said, sometimes this is not sometimes most of the time this is what is moving the market. All right, so trend line, channel 2, I didn't put that, channel, and Fibonacci. It's just literally so much thing you can do on RSI. All right, now for an example, support resistance, that's one right there. I did place one. This is a weekly time frame, and you can realize this is a bottom here. That was the bottom of the bear market of 2013 boom Bitcoin, and this is a bottom, same zone, exactly same zone in which you have this. Another situation here is that we've been bouncing between this. That was a sideways market here, and we've been bouncing over this here, same situation. And this guy is literally 4 years of data. 4 years of data. Okay, nothing to do with the price, because here we are around 200 and something dollar, and this is like 4K. Nothing to do with the price, guys. It's all about relationship between supply and demand. This doesn't have nothing to do with the price. Another situation here, this is one of my favorite way to identify breaks when people are paying. Like you have a situation here, consolidation, and you have a potential downtrend line. We get through this stuff right there, the market will certainly keep going up. I have one here, 1 2 3, and then we break here, and then we have a major run. Major run. This can also be used if you are Elliott wave counter to place a name on your waves, because you know that you have an impulse that start here, you have one that start here, and when this thing break, you're gonna have another one. And if it doesn't break, you can literally drop, and then boom, you get into a correction. Just another one, RSI downtrend in the bear market. Now this is interesting because as you can see, do you see how the price is behaving? And that was 2000, Amazon 2000, and that was the dot-com bubble. When it burst somewhere around here, we drop like crazy. But as you can see, we have a downtrend line on RSI weekly time frame. But we bounce here. We go through it here, and we retest it here. So this is where people will start accumulating somewhere here. Like good technical analysis will start accumulate somewhere here, and the interesting thing about that, if you get into this with the mindset of buying the dip, you're gonna bleed this all the way down. You're gonna be bleeding this entire thing, lots of pain, of suffering for no reason. But you can wait for the pattern, and then when you see this thing right there, you'll be like, all right, this is time for accumulation. You will have the luxury of buying Amazon at $5.5 per share, and Amazon is like 3K now. Okay, so that's the reason why I like to say you don't buy the dip, you buy the pattern. Dumb people buy dips. We don't do that in technical analysis. This is extremely powerful, guys. You can pull up your weekly time frame chart, Amazon between 2000 and 2002, and you can place that stuff and practice a little bit. You'll realize that's how powerful that thing is. That's another one. RSI and candlestick trend line confirm each other for a change of trend. Now this is powerful too. I have a similar example on Tesla for 2020. I don't know if I place this chart here, but this chart will probably be on the book. I tend to place more chart on the book so you guys can have more visual documentation. It's easier for me to place them on the book than just to keep this thing short. So you can see this in like 1, 2, 3. We try, and that's another 4 decent. When we break through this, as you can see, this break happened before the price start going down. This is where I start being careful. If I'm already in a long, I'm careful right there. This thing break. This is not gonna break for no reason. That's a daily time frame. Litecoin, we going up, we break here. This is a situation for me to start be careful. Of course, there's many more signs. For an example, these are divergence, but we are in a bull trend. Divergence, we're gonna talk about that, but divergence can literally have 4 interpretation when you're using RSI. So most people don't know that, but we're gonna talk about that for sure. So you have this situation in which the uptrend line have been broken here, and the price is still soaring. So people that are using RSI will probably start dumping their long or reducing their position here. They probably have a bigger, they will probably make the best out of this position if you're not using RSI. So principle. Some general principle is if you are over 50, the market sentiment is considered bullish. There's more than just that. I've told you that you can literally look at the chart and see the relationship between how many oversold and how many overbought you have, and that can literally give you a clear sentiment. Under 40, the market sentiment is considered bearish. Now, RSI principle in the bull market. Oversold, you probably know this by now. It's gonna stick in your mind. Oversold are rare. When they happen, you can look for good opportunity to go long after confirmation. Overbought is very common, and the market can stay overbought for a very long time. This is why people get confused most of the time. RSI principle in bear market is that the market is often oversold and can spend lots of time oversold. You can get oversold after oversold after oversold. Price is going down, you buying, and then you'll be like, this is not working, I hate RSI. It's just because you are wrong about your overall trend strategy. You need to go back in a bigger time frame and make sure that you're in the right direction. Overbought situation can be used to look for bear rallies shorts. So you have the bear rallies situation in which you have a bounce, and you look for this overbought situation. You look for a confirmation in a lower time frame, and then you enter shorts. Very powerful. After confirmation with another, like I said, analysis indicator, we're gonna use them properly in the poetry now. Divergence in the RSI. They happen when the price action create a new high or a new low, but the RSI value do not follow the same path. So you have RSI, and then you have price, price, okay, and then you have something like this, and then you have something like this, and then the price gives you something like this. That's a divergence. You can have a bullish diversion in a major bull market, bullish divergence in a major bear market, a bearish divergence in a major bear market, and a bearish diversion in a major bull market. Most people will never tell you that, because most people don't know that. All bullish diversions are not the same. I hope that is clear, because that is what makes people lose money using RSI. So remember, we identify those patterns on the daily time frame, but the trend is 30 on the weekly time frame. So we use the weekly to study the trend, but we use the pattern, like I said, on daily time frame. For example, when we say bullish diversions in a bull market, we mean the diversion happen in a daily time frame, okay, but the weekly is bullish. So the trend study tell you this is bullish, this is what you get on the weekly time frame, and the pattern tells you this is diversion, and you get this on a daily time frame. If you didn't get it, just go ahead and review that stuff again. Pause the video, do it again until you get it clear. So a bullish divergence means on a weekly time frame the trend is bullish, but the diversions happen in a daily time frame. Sometimes you can have diversions in a lower time frame. 4-hour time frame diversions are also good, okay, but this is a part 3 discussion. Bullish divergence in a bull market. So weekly we bullish, okay, and daily we have a diversion. This is the situation, okay. So price record new low. Is this that man mean? Price record new low in the RSI. I think that I'm wrong, but yeah, that's it. So price record new low, but the RSI do not follow. A bullish diversion. So you have the price. So you have something like that on a daily time frame, but RSI give you something like that. So this is a bullish divergence. They are extremely rare in a daily time frame, because this would imply that the daily RSI reach under 30, which is extremely rare in a bull market. Like we told you, this is a bull market. Oversold are rare. So you need to find those entry points on your entry time frame. So this is where you go in your 4-hour and your 1 hour and look for an entry. It can be anything: inverted head and shoulder, falling wedge, bull flags, that kind of stuff. You find them here and then you trade them. Those who dare go against the trend are closing here. So people who specialize in reverse trading, they did enter a short in bull market, so they're gonna look for that to close. Then you can look for that to enter long. Those who did short the last rally are taking losses. Okay, all these action are buy pressure. Buy pressure. I mean they are increasing the demand, because a short seller need to buy to close its position. See what I mean? Now bull are in full control. When you see this, when you see that stuff, a bullish diversion in a bull market, you must buy using 4-hour and 1-hour time frame as a time frame to take action. Okay, there's a lot of situation. There's way more short because every time I see something like that, I screenshot the chart and I place them in a big folder, and then I have thousands of example, different market, forex, stocks, crypto. So I'm gonna dump them in the book so you guys have more example that you can use. A bullish divergence in a bull market. Now, this is a bull market. We are in a 4-hour time frame, guys. Pay attention to this one. This is powerful. And 4-hour time frame, you have this. See, lower low in the price, but higher high on RSI. This means at that moment in time, the supply was bigger than the demand, and all of a sudden, even if the price is going down, the demand get bigger than the supply. And this is many reasons. Short sellers closing their shorts, people that are increasing their position long. This can increase the demand, and then you get this divergence right there. This is a bull market. This is where we got it. This is a bigger time frame, probably the daily or weekly time frame. Same zone, we move from 4-hour time frame to daily time frame. So you will have entered here and probably write that thing all the way up here. This is how powerful that thing is. As you can see, we are oversold on the daily time frame. See, but when we go all the way down to the 4-hour time frame, this is the zone where we look for the entry. There's many ways to enter here. For an example, this could be this could be a downtrend line, okay, and then you use your Fibonacci tool and then you enter this thing right there. So easy. It comes with a lot of practice, I know, but that is very easy to take. Now, a bearish divergence in a bull market, which means this is the weekly, and this is daily. And the weekly time frame, we are in a bear market, and in the bearish divergence, which means this is the price are going up, and RSI give you something like that. Okay, that's a bearish diversion. The price are recording new high, but RSI do not follow. The mentally here is to reduce long and take profit. This is a bull market. Bearish divergence in the bull market. Bearish. I think I'm more a little bit down. Price is going up. Or this is a bearish diversion in bull market. Yeah, that's right. So no, sorry guys. Bull market. This is here on a weekly time frame. Sorry. So bearish diversions because RSI is not going up. So we have higher high on the price is our high on price, but the RSI is not follow. So the mentality here is to reduce your long and take some profit. If you do not have any open long, you wait. You don't go long if you see that bearish diversion in a bull market. So weekly we are bull, but the diversions happen in a daily time frame. It's a bearish diversion. You don't short that stuff, you reduce or long, or you wait. So prepare your analysis to buy on retracement if ever we get one. A bearish diversion in the bull market means the bull get some rest. That doesn't mean that the bear has take control. Okay, you should not short that stuff, because it might works one or a few times, but at one point this will cause your portfolio to bleed like crazy. You're gonna lose a lot of money. Okay, so that's an example of a bearish diversion, and this is a bull market. So we have a bull market, and you see this bearish diversions. Okay, you have a higher high on the price, but RSI is not doing the same thing. Now you can take the chance to short that, but the market could have stayed somewhere here and we start going up again. See what I mean? So there's no guarantee that the price will go down, but you can wait for situation to enter along on retracement. Okay, you do not short that stuff. Okay. Now, bullish diversions in a bear market. So bear market, so this is a weekly study. Bullish diversions, you see that in a daily time frame. Okay, so take some profit on your short if you do not have an open position. Okay, we are in a bear market. We assume that you are only shorting. If you see a bullish diversion, you can reduce the short to take some profit. Like you, some traders are taking profit, closing some of their shorts. Those who bought the last support are getting liquidated. Okay, and those who bought the last oversold are getting liquidated. This entire thing is literally creating more demand in the situation, and this is why you get the diversion. This might initiate a bear rally, a small bounce, like how they like to say it, but you don't buy here. Okay, because the overall trend is bearish, you don't buy here. You can reduce your short. It's a form of buying, but by buy I mean you don't expose yourself to a clear long. Okay, and here what you get, bullish diversions in a bear market. I don't have an example here. I don't have an example for this one. I'll put them on the book. It's okay. So bullish diversion in bear market. This is a weekly study. Okay, it's a bear market. Bullish diversions, it's a daily presentation. So what do you get? You get price that are going down. This is the price going down, and then your RSI is telling you something like this. So you get a bullish diversions. We are in the exit time frame, and the trend is weekly. Like weekly says that it's a bearish trend. Sorry, you cannot buy those diversions because it's not profitable to buy them, because this thing I've realized with bear market is that in a bull market you can get push nice and cool. The bull like the grinding thing, but the bear is a little bit drop, consolidation, drop again, consolidation, drop again, and those situations right there, the RSI can literally move from 30 and between 40 and 60. That's the reason why bullish diversions can trap you in a bear market, and that is extremely frustrating, because you can go ahead and you see your RSI at 30 or even 25, then you buy it, and then what happened is that the bear maintain on consolidation, and what happened is that the RSI start going up and stay between 40 and 60. The price stays stable. You buy here, no bounce, RSI reset himself between 40 and 60, and then you have a surge of supply again, then you get another sell-off, and then boom, you lose money. Alright, you might need to listen to that again just to make it so that it makes sense to you. So between 40 and 60, day traders can have fun, but this is a very specialized type of trading style that we're going to talk about on part 3. So we're in a 4-hour time frame. This is a bear market. I mean, it's clearly a bear market. See those bullish diversions, guy? These things can trap you. See that? You buy that stuff here. The bounce is literally not that much, and what happened is that we consolidate and then boom, we drop again. Same situation, another bullish diversion. Wait, consolidate, boom, another one. What you should do is short these things instead of focusing on these things, because the bear trend tells you clearly these are more important to enter short than these situations to open a long. So you don't care here to open position. You can reduce a short. For an example, if I short here, somewhere here, and I get a bullish diversion, I might reduce my short by 20-50%, but I'm not gonna enter a long position in a bear market. That is dangerous because of the way that the bear like to behave, that kind of stuff. That stuff is a big trap, big trap. Now in the daily time frame of that same period, the market is not even oversold. There are plenty of room to keep going down on the main time frame. I think I'm going to show you that, and you clearly realize more than 4 bullish diversions. I can see that here, so many of them, and you clearly realize those who don't understand this fractal concept will get slaughtered big time, since you're gonna go ahead and buy this stuff here. You'll be like, this is a bullish diversion, I'm buying, okay, but price is going down. Oh, this is a bullish diversion, I'm gonna double my position. Then guess what happened? We get oversold, not bounce, dead count bounce, we going down, and we keep going down further. So that can be very dangerous, guys. Daily time frame, same chart. See those oversold? This is still a bearish market. What you see here is that the price keep going down, no matter what or many oversold situation we have. And a big time frame, you see this, you can lose a lot of money, like a lot of money. You expose yourself to that stuff, you can lose a lot of money, because think about it, guys. The first oversold happens somewhere. We're gonna disclose this part here, but after this overbought situation, I would have short here. This is a divergence, as you can see it. It's a bear market, beautiful bearish divergence, bear market. I'm gonna short there, but I'm not gonna buy those stuff. You buy that stuff here, what, $500? Next thing you know, we are $400, and then we keep dropping all the way down to, I think that was 100 or 150 something. So they can be very dangerous buying the stuff in the one time frame, taking the one action in the one trend. You against the trend, taking the one action using RSI against the trend. This is dangerous. This is what gets everybody frustrated, and they literally tell you that, well, you know what, RSI is trash. Nope, you just don't know how to use that stuff. That's the only explanation. Now, bearish diversion, bear market. So weekly we are bearish, going down, and here there is a bearish diversion. This is where you must short. I'll show you a situation here. Let's go ahead. This is where the money is in the bear market. They are rare actually, but you see this stuff, you short. After often occur at the top of a bear rally, small dead cat bounce, you get a bearish diversion, bear market, you short. The major trend is fairly bearish weekly time frame, but you spot up that particular diversion on your entry time frame. For an example, you see that stuff in the daily time frame, 4-hour time frame. My friend, you short it. You short it, no question. Because you might regret making that money, losing that money down the road. See that 4-hour time frame, bearish diversion in a bear market. So daily, this is a major bear market, weekly, and then your entry time frame, we are in a 4-hour time frame, bearish diversion. You short that stuff, boom. You short that stuff, boom. Next time we move from 11k down to $7,600. Lots of money to be made here. I see that stuff, I don't buy it. I might reduce just a little bit, but I keep my short open, boom, more money. Now same period of the main time frame, you can barely see it on a daily time frame. The bear market is not even close to an end. Yeah, I just remember that was the very beginning of the bear market of what, I don't really, it's like 2018. This is very early. We are somewhere here, and we are going toward $3,000. So imagine shorting Bitcoin here at 10k, and then next thing we know, we're going all the way down to 3k. This is, for an example, this is a bear market, 4-hour time frame. You see that bearish diversion, you open your short somewhere here, This is where it gets interesting. On a 4-hour time frame, we are not even that oversold. There's plenty of room to go lower than that. So you keep that short open, we going down and all the way down, and this is literally $3,000. The bottom was $3,000. See what I mean? But if you did bought those stuff, you will be bleeding for in like 10-12 months easy. So you don't have to expose yourself to that stuff. Keep your cash in your pocket and wait for bearish diversion in a bear market. For those type of concept, your eyes need to be trained, and I can tell you guys, you need a lot of example. You're gonna need to see this thing over and over and over and over, just to make sure you don't miss them. And that's the reason why the book is important, because I'm just gonna take my time and dump all my screenshots on them and explain them, because if I'm doing this here, we might end up in a 4-5 hour class. So remember, as swing trader, you will often need to open a position and hold for days, and this is extremely important. We're not day traders, and often we let our position open for weeks and months. So that's the reason why we trust the trend so much, So you need to be able to trust your analysis, otherwise you won't sleep at night. That's true, and that's the reason why you need to train yourself and see as much short as possible. Now in part 3, we're gonna talk about setup, how to place your entries, set up your target, move your stop loss. This is big, stop loss is big money making machine for me. Exit using different concepts. All the concepts that we did cover on the part 2, we're gonna use them interchangeably, just to for an example, you have like three, 4 indicators telling you the exact same thing. You're gonna pay attention to that more than a simple thing. For an example, you're making you are getting ready to enter a trade, and then trend line is telling you to do something. For an example, trend line is telling you to place action A, and then a channel tell you to place action B, but RSI is on this side, and Fibonacci is on this side, and this is the only thing. Only the channel tells you the action B, and MACD tells you that, Bollinger Band tells you that. You will clearly pay attention to that stuff more than this one right there. So if this is the case, you take the money, and then you have a plan to exit if this is the eventual situation. That's how we create odds of winning, so that we can make more money over time. Okay, so you will make it there, because I know you guys, if you've been watching this entire stuff, I think you really into it, because I think it's more than 20 lessons, and they're like 1 hour each. So if you make it that far, I'll own you the part 3. Okay, so you're supposed to feel proud of this, because that's a lot of information, and trust me, that's actually nothing if you are just starting. So once again, workbook part 3, I'm gonna beef up that book with so much charts, so you can actually resolve case, see charts, and that's the reason why I need to make the presentation before the book. So I'll make sure that I'm gonna watch the video again and make sure that I did cover everything I had to, and then make sure that I had more information in the book. Okay, so just to close this lesson, disclaimer again, this channel do not intend to replace any training and coaching program. It's a deep introduction of the world of crypto trading. This series of this channel must not be considered as financial advices. Our contents are only here to educate, inform, and entertain. Trading can be very risky. Only risk money you can afford to lose. Alright guys, take care. Remember to subscribe, like the video, the whole thing, the whole YouTube thing, and then I'll keep creating good content about trading. Alright, take care. Bye.